When the facts change, I change my mind. What do you do, sir? Welcome to the Techno Fundamental Report for December the 11th. John Maynard Keynes, when the facts change, you have to change your mind. Things change. And so that brings me to a point here. I would love to have a buy and hold strategy. I have tried to maintain a buy and hold strategy in the past, especially back in the 1980s. And things just tend to change. So what happens is that some buy and holds work, some don't. An example would be with my grandfather. I tell you all the time, he bought and held railroad stocks, and they were a disaster. However, my dad bought and held Exxon, which worked out pretty well. So it's sometimes it works, sometimes it doesn't work. But let's just kind of review here. Now, you might want to pause your video player and read the text here. But why buy and hold can fail? You end up holding poor performers. Remember, in our past videos, we've talked about how few stocks really are successful. So when you go into a buy and hold mentality, you can end up with some poor performers. External shocks and market downturns. So in other words, you could have a disaster such as the financial crisis of 2008 or whatever. And what also happens during these periods is that the stocks that were strongest and the leaders of a certain rally, and then you get a big drop and then they just don't come back. So buy and hold works until it doesn't. Concentrated risk, over concentration in a single stock, investor emotion, kind of like my grandfather. He was very emotionally attached to the railroad stocks, so he would buy and hold them. And then most importantly is opportunity costs. In other words, if you're tying up your capital in poor performers, then you don't have capital to go after the better ideas. Also, buy low, sell high generally just doesn't work. It's buy high, sell higher. You want to look for stocks that are breaking out into new high territory. Now, I've got an example here of what I'm talking about. This is AutoZone. You can see it made a high here, and then it came down. And so, a lot of people would say buy low, might want to buy in here. But then you turn around and it's making another new low. So, okay, well, we would buy here, and then we're here, and then we're here. So, then you get to this low here, and everyone's pretty convinced this is the low. You get the rally, and then boom, it comes down and makes a lower low. So you want to buy high, sell higher. So let's take a look at some growth stocks, growth stock indicators. We talked last week about developing 5 different financial securities or way to measure these securities where we're looking for an emphasis on the performance of growth stocks. So the NASDAQ tends to be a growth stock index. The S&P low volatility ETF tends to be more of a defensive, low volatile situation. So when the NASDAQ is outperforming low volatility, this goes up. So you can see here we're above the 2 moving averages and really starting to look somewhat constructive. Not making a new high, but definitely trending upwards. So let's look at another one. This is the NASDAQ compared to the consumer staples. This is what we call the aggression index. You can see here it made a high, came down, has a low, and is now back above the 2 moving averages, looking somewhat constructive here. So growth stocks, hopefully this was the bottom. We're hoping this is the bottom. We'll have to see. Now, we took some ETFs that were very growthy. This is the ARK Innovation Fund. You can see here major sell-off. Hopefully this is the low. Starting to get a rally above the lower moving average, but the lower moving average is still somewhat in a downtrend and it needs to turn up. But this is showing signs of improvement on this particular fund, which is very growthy. Now, this is also a growthy fund. This is the IBD 50. These are 50 growth stocks identified by Investors Business Daily. You can see a top, actually a lower top, major sell-off. Hopefully this is the low. Well, we're just now getting it back above that lower moving average. Could see a little bit more action there. This particular fund doesn't look that good, but showing some little signs of improvement. Now here's the momentum factor fund. This is high momentum stock, so this is very growth oriented. You can see a major top here, came down, made hopefully the low, and we're moving up above the moving averages, and the lower moving average has turned up. So this is very positive. So growth stocks are starting to show some signs of improvement. Now also the Fed did cut interest rates today. We're seeing improvement in interest rates. You can see that the 5-year Treasury yield continues to stay in a downtrend. And on the power index, we continue to stay below zero. So interest rates are steady. The primary trend of both the S&P and the NASDAQ, the primary trend is up. Actually, the S&P did hit a new high today. Very constructive. These particular indexes look good. It's just the individual growth stocks. That's where the trouble is right now. But we are starting to see a few names that are starting to look constructive. The VIX, the volatility index, down here below 16, much improved. This is a very good sign because we're back into like a normal area. So volatility is really starting to improve. Price of oil continues to be in a downtrend. We actually got down to 57.50. We're currently at 58.25 on West Texas Intermediate. But oil continues to stay in a downtrend, which is somewhat of an indication of inflation, and it is a positive. Now, on the new lows on the New York Stock Exchange, we saw a tremendous amount of negative problem here with the new lows really skyrocketing, but they're starting to settle down. Now we've gone 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days below 40 a day. So this is positive. Things are starting to improve. Now the one negative here is sentiment is picking up. Now sentiment is a kind of a crazy indicator because it's a contrary indicator. In other words, if everyone is negative, which was the low in the market this year, if everybody's negative, that's usually time to buy. However, when everyone gets positive, it's just time to be cautious. So you can see here we can go extended amount of time where people stay positive. However, we've seen a major shift in sentiment here in the last 2 weeks. Yeah, we'll just have to see. Now on the semiconductors, we're seeing definitely improvement in the semiconductors, which is a very growth-oriented group and very cyclical. But you can see here, looks like we've made a low. We're back above the moving averages. We're trending up, and we actually today, we broke out to a new high on the SMH, which is the semiconductor group. So all in all, we are seeing some positives here. Don't get crazy aggressive, but a little bit of nibbling might be appropriate at this time. So if you have any questions, please let me know. Thank you.